Stocks enjoyed a very solid session here on Thursday, with 86% of the companies in the S&P 500 closing in the green. Not only that, but many of those tech giants held their own. The only one of the Magnificent Seven that was lower was Amazon. But we did find that a lot of the tech enthusiasm was kind of drifting towards a big IPO today. Today was ARM Holdings, that was once a publicly traded company a while back, came back to the publicly traded markets here today and was met with nice investor enthusiasm. Not only did the stock close higher by more than 20% today, but it was still climbing in the after-hours session, as we'll talk about in tonight's video. In addition to that, we want to take a look at what's been going on from a macro perspective. Today was one of the more unique days that you'll ever see. It was a day when the US dollar was up, yet commodities were up, and many foreign stocks outperformed US stocks. That typically does not happen. Today was also a day when the 10-year Treasury yield went up, yet a lot of interest rate sensitive assets also went up. So a bit of a strange day, and I'm going to show you a number of things in tonight's video that was not a normal occurrence, and make sure that you're comfortable with what you're looking at with our charts. And then on our trade application example, I wanted to focus a very well-known retailer here in the United States that is bouncing up and off of its rising moving average. And I thought today would be a nice day to highlight a bull put spread. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 14th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. You'll also find which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of X, formerly known as Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ, and I really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence over on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, we've got our S&P 500 heat map pulled up here in front of us. And boy, oh boy, what a nice day it was. Vast majority of stocks were higher. Only really a handful of stocks that stand out on the negative side of the ledger. Netflix is one of them. They've kind of had a bit more volatile trading here, it seems like, in the last 48 hours or so, but today pulled back another 2.8%. One of their competitors, Disney, by the way, was up today. Of course, Disney's had a terrible year, but there were some rumors here floating around today that Disney might be interested in selling their ABC network to, I think it was Nexstar. So we'll see if those rumors prove to be true or not. But for one day, kind of the enthusiasm went back to the traditional TV networks there. Over here, we did see that Visa and MasterCard both finished lower today. I think that had something to do with kind of a restructuring of a share class with Visa. So it was down 2.5% today. MasterCard really probably just down in sympathy more than anything else, down just 0.71% today. Dexcom was one of the bigger losers within the healthcare space, down about 3.5%. A couple of the bigger healthcare players, Eli Lilly and Johnson & Johnson, both down a bit here today. In the industrials area, we did see Train was down 2.5%, Carrier down 0.87%. Of course, those two are tied together as well. And then Old Dominion Freight Line down about 2% here today. MO was down today, however, don't read too much into that one. Those of you that follow its dividend history know that its dividend yield these days is quite excessive at around like 8 or 9%. And today was actually its ex-dividend date. So remember, on an ex-dividend date, the amount of the dividend per share comes directly out of the share price of the company, right? Dividends are not free money, as folks will be, excited to let you know about on Twitter. I would hope most of you that are well educated within the financial markets are already aware of that. But in case you're not, it is true. Dividends are not free money. They do come from somewhere, and it's like taking money out of one pocket and putting it in the other. So today, Altria was down 1.45%. But that was entirely due to the dividend that was paid. If there wasn't a dividend paid today and you applied that exact amount back to Altria, it actually would have closed higher today. So that was the only reason behind that one. Otherwise, it was a pretty green day, as you can see. I mean, it's hard to know where to start. I guess we could probably rattle off the Magnificent Seven as we typically do, since those are the stocks that you guys are probably the most interested in collectively. So Microsoft was up 0.79%. Apple was up 0.88%. Remember when I was with you a couple of days ago, we were talking about Apple's big iPhone event, and so stock had sold off that day, but a little bit of a recovery here today. Alphabet was up about 1%. That was a new 52-week high for that AI-related company. And we did have Meta, the old Facebook, up 2% today, so that appears to be likely the strongest Magnificent Seven. Let me just double check on Tesla. Yeah, so Meta was the top performing Magnificent Seven. Tesla would have been number 2. It was up 1.75%, and then Amazon was the only laggard of the bunch. It was down 0.09%. Nvidia, by the way, was up just a touch, 0.21%. So of the Magnificent Seven, only Amazon finished lower, and it was pretty much an afterthought, not a big deal there at all. In terms of other areas that found some green, AT&T stands out. It was up 3% today. We actually just covered that yesterday in my factor-based swing trading class as our bullish swing trade idea, so it was nice to see it up 3% after we identified that bounce candidate there. We also have some of the healthcare stocks that are up. AbbVie and Amgen both managed to close higher today. Speaking of AbbVie, some of you heard my comment the last time I was with you on Tuesday with how my TD Ameritrade account got transferred to Schwab, and my paper money account that I use for some of my classes got reset, and it did impact my market outlook trades. And so I did go back earlier today and go through all of my previous market outlook trades because I was curious, with tomorrow being options expiration day for the month of September, if there was something I needed to kind of clean up from that perspective. And what I found was that all of our trades were doing well except for one. The only one that I saw that we still have on right now that was losing money was AbbVie. I did a bearish trade on that, and it has gone up since then. Otherwise, all the rest of the trades have actually done what we want them to do, which is behave themselves. So anyway, we'll keep our eye on AbbVie, but it is possible we might end up getting stopped out of that previous bearish trade that we did on that one. By the way, the other one that was a little closer in terms of where things shake out for tomorrow was GLD, the gold ETF. Remember, we had done a iron condor on that. And as long as GLD remains above $175 tomorrow, that should roll off our books tomorrow at 100% max gain. So odds highly suggest that that will be the case. Anyway, back to the heat map here. You can see a lot of the discretionary stocks were firing on all cylinders today. Carnival was up 4%. We had Norwegian Cruises up 5%. A couple of the home improvement companies, Home Depot and Lowe's, up about 1%. We'll actually talk about one of those a little bit later on. In the industrials, Caterpillar had a nice day, up 2.4%. PACCAR was up about 3%, so some good action there as well. Banks continue to work for the most part. Again, the fintech players, Visa and MasterCard, had a tough day, but otherwise, you can see most of the financials finished nicely in the green. JP Morgan up about 2% here today. Remember, that was something we had picked up upon in our conversation on Tuesday. Remember, that was a day where most of the market was down, but the financials and the energy stocks managed to buck the trend. So we'll have to keep our eye on that, but it seems like maybe a little bit of bullishness coming back to some of those financials there. So that was good to see. Of course, Goldman Sachs was up 2.86% today. Morgan Stanley up 2%. Remember, one of the big stories here today was ARM Holdings going public, and my oh my, did it make a splash. It actually was released to the public while I was in my question and answer session with my premium members here today, and we watched it open up at about $56, and by the end of the day it actually closed above 63, and so that is viewed as a successful launch of that IPO. Whether it holds or not in coming weeks, months, and years is anybody's guess, but at least for one day, it does appear that the IPO will be viewed as successful. And remember, Goldman Sachs, Morgan Stanley, they like it when IPOs are successfully launched because they want to encourage as many other companies out there to do their IPOs as well, because those types of investment banking fees roll in and really pad the profits at those two companies in particular. So anyway, that could have been part of the story behind the strength in the financials here today as well. One thing that was interesting, and I did notice that David was tweeting about this a bit as well, today was a bit of an oddball day because we had interest rates that were up, yet a lot of the areas that you would expect to suffer when interest rates are up actually performed quite well today. And I noticed the same thing. Some of you might have seen my tweet about the dividend aristocrats that outperformed the market today. Usually on a day when interest rates are up, the dividend aristocrats will underperform the market. Today that was not the case. And so you did have a lot of those kind of defensive areas like consumer staples holding up pretty well. You had real estate holding up pretty well. Even the utilities are trying to get it together, so to speak. We actually just sold a put on Sempra Energy in my Monday afternoon options for long-term investors class here a few days ago. So we're happy to see it up about 2% here today. But they weren't alone. Most of the utilities had a very nice day. One utility, by the way, that is trending quite nicely is Constellation. CEG is the ticker symbol. This is not Constellation Brands, the consumer company. This is Constellation Energy, the nuclear power related company. And those of you that follow me on X or Twitter might have seen here a few weeks back where I put a 24 grid together of the 24 biggest utilities out there, and only one of them was trading above its moving average, and that was Constellation Energy. If you're looking for a leadership position within utilities, ticker symbol CEG is the only one that looks like it's got a pretty healthy chart at the moment. Most of the others are just struggling to get off of the bottoms here, but they have been pretty ugly and pretty oversold, and therefore maybe there is a little bit of gas in the tank to push them higher in the short term. But certainly the more intermediate trends are to the downside with the utilities, except for Constellation Energy. That thing has been humming to the upside. All right, let's go ahead and take a peek here now at the specific numbers within the S&P 500. And you can see that 430 stocks within the S&P 500 closed higher here today. That was a very strong showing. That's good for about 86% of companies in the S&P 500 closing in the green today. Remember, anytime we get beyond 80%, that's considered a pretty extreme day. And of course, if you want to be bullish, you'd like to see those extreme days racking up when it's the 80% on the plus side of the market, not on the negative side, because we've seen a few of those lately as well. But today, the bulls certainly ruled the roost. So we'll see if they can continue that into tomorrow. Remember, tomorrow is quad witching day, so we've got a lot of options contracts that will expire. Make sure you're babysitting your positions as best you can if you have the ability to at least pull up your smartphone while you're at work if you need to close down positions or whatever. But just be forewarned that tomorrow is expiration day for the month of September. All right, let's go ahead and take a look now at our 4 grid here. And this is chart 4B for those of you that are following along at home with your own Market Scholars charting package. So as we pull this up here, first things first, the S&P 500 had a pretty good showing today. It was up 0.84%, and this is a much more pleasant outcome than what we were dealing with just a couple of days ago. Remember, a couple of days ago, I had a little bit more worries because it didn't seem like we had the willingness to get up and off of that moving average. Well, today, my tune is changing a little bit. You know, we have to recognize that things are changing all the time, and that's the whole point, right? Like they always say, the definition of insanity is having the same thing happen over and over and over, and then you expecting a different outcome. So naturally, if you are a active trader, you will want to change your mind regularly, and you shouldn't let anybody hold that against you. That's the whole part of active management, right? You shouldn't be digging your heels in when the market tells you constantly that you're wrong, type of a thing. If you're an active trader, especially, even if you're a long-term investor. And I had a bit of a mea culpa here in my question and answer session today about a stock that I got wrong from a long-term perspective. So regardless of what kind of trader or investor you are, you're going to get things wrong. But it's a matter of whether you're willing to stay wrong or not. And if you are, you better have a good reason for it. In this case, it's appearing that the S&P 500 has a bit more promise today than it did just 48 hours ago. And maybe this is part of the enthusiasm around the ARM IPO, and maybe that it got absorbed by the market nicely and there wasn't anything that derailed it. All that kind of stuff can help a bit. But another thing that catches my eye with this is a really good example from an education perspective that of something that rarely happens, and it's only on the S&P 500. I can't show this to you on any of the other charts, but let me try to zoom in if it'll allow me to. So when we're looking at the last 4 days of candles here, we have a very interesting, unique, and odd formation. Notice that we have all 4 different color schemes present in the last 4 days. I don't know if I can zoom in anymore. I think the most it'll let me kind of zoom in there is, yeah, there we go. That might be a little bit better. You can kind of get a sense of what I'm saying here, though. Here's today's candle, there's yesterday's candle, there's the day before, and there's the day before. So this is this week, effectively, right? This is Thursday, Wednesday, Tuesday, and Monday. Well, anyway, look at the background colors of that chart of the S&P 500. On Monday, we had this light pink background color, which we would identify as weekly bearish. On Tuesday, that was the day, remember, that Apple had the big sell-off, so it really pressured the overall market. We went to this darker shade of pink, which we would consider to be strongly bearish. So we went from weekly bearish to strongly bearish. Well, guess what? The very next day, we went from strongly bearish to weekly bullish. That's what that light green is telling us there. And then today, we went from weekly bullish to strongly bullish. And that is almost unheard of, right? That is why the S&P 500 is the only one I can show that to you on, and it is extremely rare. I don't know if it's really all that important. I'm just pointing it out because it might have caught your guys' eyes as well, that this is a period where the market can't seem to make up its mind. And so, if you're feeling like your head is spinning this week, you're not alone. Even the technical indicators themselves are having a hard time keeping up with the different movements there. So you will rarely see that, especially on something like the S&P 500, where you actually, for the last 4 days, have an example of all 4 colors. I guess technically there is a 5th color. If you ever see white show up on the backgrounds of these charts, that means that the intermediate posture was exactly the same today as it was yesterday, or the reading of it was, and that rarely happens. So that's why you don't see the white color show up. I don't even have one single example of these 4 charts over the last 3 months where I could show that to you, but it does happen occasionally. Sometimes I point that out to you, especially like on the 12 grid charts. But anyway, that's kind of weird that we have 4 different colors, 4 different postures in 4 different days. But where we stand right now, based upon what we know at the moment, is things do look better than they have at any point prior to this week, right? Where we closed here on the S&P 500 will take us back to where we were trading on September 5th. So, this looked like it wanted to roll over, but the market gathered itself and pushed ourselves back up. And so price is still above a falling moving average, as it has been for the last few days. But as long as price stays above the moving average, it will have a good chance of pulling the moving average higher, so we can see that upslope eventually down the road. So we'll keep our eye on that. If that happens, we'll let you know. But right now, that is the news story, is that we had this green intermediate line rolling over earlier this week, but now with the last 2 days of rally, it's been enough to bend that green line right along up with the S&P 500. You can see that we closed somewhat near the high of the day today as well, so that's another positive sign there. You'll also notice that on all 4 of our charts that this daily range versus the average true range is the color of light blue on all four of these charts. And what that means is that we had a smallish range day, right? Today we moved about 33 points from high to low on the S&P 500, but the more typical range that we had been experiencing during this current moment in time had been closer to 40 points. And so it was a pretty calm day today as well. We didn't have a lot of extreme selling followed by extreme buying followed by extreme selling and so forth. It was just a quiet, calm day, but yet very consistently bullish. So, nothing wrong with that. I don't mind those days at all myself, because then you're not letting your emotions get involved with your trading nearly as much if you're not getting frazzled by the market's movements that seem to be changing on a whim throughout the day. Today was just kind of a consistent move to the upside. So we're back to that strongly bullish posture there on the S&P 500. With the Dow Jones, it was up 0.96% today. So it did slightly better than the S&P 500, and that probably falls in line with what I would have expected based upon what I posted on Twitter earlier about the dividend aristocrats outperforming the market. Remember, you have a lot of the aristocrats that are part of the Dow Jones. They're not one and the same. There's some differences, like a Salesforce.com and a Disney and a Boeing are in the Dow, but they don't pay dividends. But you have plenty that are overlapping, stocks like Coca-Cola and McDonald's and even 3M, and some of those types of companies are aristocrats as well. So anyway, this one has kind of a closer overlay to your dividend aristocrats than you would find with the more spread out S&P 500. And so the Dow had a pretty strong day, up 0.96%. You can see that it was an important day from a candle perspective as well. Not only did we close nearer the high of the day, but also we managed to get back up and over that falling 30-day moving average. And again, a couple of days ago, I was more concerned about that, right? We went up, we kissed that moving average, we punched back down below it. It looked like it was going to roll over again even yesterday and kind of match the behavior that this thing had back here at the end of August. Today changes that behavior. Today showed us that it can make a move above the moving average, and the sellers, if they existed there at the moving average, were flushed out of the system today. Can they come back? Sure. But for right now, it's a good sign that the bulls didn't just roll over at the moving average as they did in the last 5 attempts there in the last few weeks. So that's a good sign as well. You can see the clearance that the S&P 500 has over the moving average right now, where we have this air pocket that will give it a little bit of flexibility and a little bit of leeway, a little bit of a grace period up there. Even if it has a sell-off day or two, it's unlikely to lose control of that moving average right away. The Dow is not quite that robust, but it's got a pretty strong feel in terms of a one-day move above that moving average as well. So there's a little bit of flexibility there, but clearly the S&P 500 is stronger than the Dow right now. And of course, you don't need to take my word for it. You can just look at the green line as well, right? The green line on the S&P 500 is at 56 and rising, so it's considered a strongly bullish posture, whereas the green intermediate line on the Dow Jones is only at 39 and rising, and that's why that background color of the Dow remains that light green as opposed to the dark green that we see on the S&P 500. So the S&P still looks more promising than the Dow from a strength perspective, but we don't want to throw the Dow under the bus or anything like that, because it was an impressive showing here today, and we'll see if it can kind of build upon that in coming days and weeks. On the bottom rung now, the NASDAQ was up 0.81%. So today was kind of a bit of a rarity, at least in 2023, where we had a very strong day for the market. Again, respect the fact that 86% of stocks closed in the green today. That is an overwhelmingly bullish day, yet today was a day where the NASDAQ was the worst performer of these 4 different charts. Normally that's not the case, right? What we've been experiencing in 2023 is more to the point been the tech stocks are leading on the big up days. That didn't really happen today. So could this be a sign of the market starting to broaden out a little bit? Yes, it could be. Of course, we got to be careful taking that concept too far as well, because one day does not make a trend. But hey, like I mentioned on Tuesday, we already saw the market kind of pushing into the financials, and that continued today. So we just never know when that type of thing will start to pick up steam a little bit more. So NASDAQ had a good day, but it was actually the worst performer of these 4 different indices, up 0.81%. However, because it had been hanging in there better than some of these other indices similar to the S&P 500, you do have a strongly bullish posture back on the board. So both the S&P and the NASDAQ, of course, that's where you're going to have your biggest exposure to the Magnificent Seven. Both of those are back to strongly bullish postures. You can see this is a pretty nice looking bounce up and off of that falling 30-day moving average on the NASDAQ at this moment as well. So I liken it to what I see with the S&P 500. Yeah, it was the underperformer today, but just from a candlestick perspective, it's in a really good position right now to build off of this. And then you can see down below here, off to the right, that the Russell 2000 was actually the day's leader from these four charts perspective. The small cap index was up 1.4%. Again, they were leading on Tuesday, but then yesterday when David was with you, I'm sure he talked about this in his video, the Russell looked really sick yesterday. Well, it got all of that back and then some today. And now all of a sudden the Russell is at its highest point over the last week. Still got work to do, and from an intermediate perspective, it still looks like the worst chart of these four. But, it is a good sign that we closed basically at the high of the day. If you're looking at just the candles from today, the Russell's the one that probably fared the best at the end of the day. It closed just barely off of its high. You can see there's a little bit more of a wick at the top of the Dow and at the top of the NASDAQ and just barely at the top of the S&P 500. So there's a little bit more persistent buying all the way through the closing bell on the Russell 2000 today. And of course, this is the one that I had mentioned on Tuesday is the only one of these charts that had an oversold cluster signal here recently with that little green dot showing up when we got all three of those colored lines in the lower reversal zone. Remember, that could mean that we're due for a bit of a reversion to the mean type of a move there. So while the chart looks the worst, it may have the most potential if we were to get some sort of a short-term recovery type of a thing. So let's keep our eye on that possibility there as well. But a very nice day out of the Russell 2000. It does still have the strongly bearish posture because the green line remains below 20 in the lower reversal zone at the moment, but it is rising. And so if it can move from 14 up to, let's say, 18 tomorrow, and then on Monday we have another up day, it might be able to get above 20. And early next week we could be talking about the Russell 2000 joining these other charts with bullish postures. In the case of the Dow, weakly bullish, but in the case of the other two, strongly bullish. So a bit of a mixed day here as we kind of ended things in terms of the intermediate posture, but that again was kind of a unique situation there with the S&P 500. So if you ever get asked if it's possible to go from four different postures in 4 different days, here is one extremely rare example of where that did happen on the S&P 500. Let's take a quick peek here now at the 3 green arrows chart. And as we pull this up here, you can see that we've shown an improvement there from where we had been recently. 3 of our charts actually are back to 3 green arrow status. The S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite, all 3 of those back to 3 green arrows. For those of you that are not familiar with that terminology, it's basically just a colorful way to talk about 3 different technical indicators. In this case, the 30-day moving average, where price is above that, and then the MACD histogram, where we judge momentum, and then the stochastics, where we're judging where the stock, or in this case the index, is trading versus its recent trading ranges. So from all 3 of those indicators perspective, they all turned up more bullishly today with those 3 charts. Oddly enough, this doesn't happen very often either, but when it does, it usually does shake out this way, because you can find throughout history occasionally that the small cap universe does trade differently than these other large cap areas. But it is still a little bit weird and worth pointing out that the Russell 2000 actually has 3 red arrows still at the moment on a day when you have 3 green arrows on the other 3 charts. Remember, usually there's kind of a transition period where one of the 3 areas, or arrows I should say, would go from red to green, and then it would be the white background on these charts like we see here on occasion. But right now is kind of a weird time where today we saw all 3 of the other charts on their fresh day when they turned to 3 green arrows, and then the Russell 2000 wasn't able to get up enough to change what had been the 3 red arrow condition for it. So we'll see if that changes next week as well. But it's a good sign for the other 3 to do what they did. It kind of confirms what I had mentioned before, that today's candle feels a lot better than what we were feeling just a couple of days ago. And we're starting to get the technical evidence to support those feelings a little bit better as well. In terms of the 1040 crossover method now, you can see here that we remain with bullish postures on this particular setup on all 4 of our charts. Remember, what you're looking at here are weekly candles. So when you're looking at the orange line, it's a 10-week moving average, and then the blue line is a 40-week exponential moving average. And in this case, the Russell 2000 remains the one that is the most concerning from that perspective, or in other words, the one that is most likely to go from a bullish crossover to a bearish crossover, but we're still not quite there. Right? Sometimes we look at this on Thursdays because this is the closest to the weekend that I'll be with you. David will be with you tomorrow, and theoretically, if there was a really big sell-off tomorrow, you could see the Russell 2000. It's that close, actually end the week with that bearish cross. But today, we're still hanging on by a thread in that regard. Speaking of end of the week Thursday presentations, I'll just mention here real quick right now, and I'll try to remind you of this on Tuesday of next week as well. I will not be here next Thursday. I'll be out of town, so there will not be a video next Thursday. I will still be here next Tuesday, so you will hear from me on Tuesday. But in case it's important to you and you're wondering, hey, where's that video next Thursday? I figure if I let you know verbally a week in advance, maybe that will jog your memory at that time. But again, I'll try to remind you of that on Tuesday, so that way it's a little bit more fresh for you there as well. All right, let's go ahead and pop on over here to the internet. I always like to get a chance to say thank you to those of you that help support these presentations. As long as I'm up and over 100 likes, I'm happy to do a full-length hour-long video there for you, which is what we're doing here at the moment, because you guys did not disappoint. 107 of you came out of the woodwork and said, you know what, Brandon, I like your content and it's worth at least 5 seconds of my time. So thank you to those of you who regularly do that. Let's do some shout outs here. Thank you to Arthur and to Karen and to Curdy and to Sherry and to Biomedical. And by the way, Biomedical is a good follow on Twitter if you're interested in the theme that I talked about on Tuesday with CRISPR stocks and gene editing in general. There's a lot of folks that I follow on my timeline, and that particular account is a good one to kind of follow some of that information with. Thank you to George, and thank you to Duncan, and thank you to Pam, and Ken, and Irene, and Ash, and Michael, and Vernon. Good luck to your Vikings tonight, Vernon. And thank you to Tamil, and Joe, and John, T-Fib, Nietzsche, David, Brandon, Keola, William, Jim. Good luck to your Eagles tonight, Jim. And thank you to Claire and to Trunk and to Floyd and to Robbie and Loie and Dave and Sandeep and Sanita and Joel and Rich and NZ and Hot Rod Rob and Barry and Judy and Craig and Jeff, and the list goes on and on and on. I can't get to all of you, but hopefully every so often you get to hear your name in the old shout-outs portion of the presentation. I appreciate all of you, and I know you're committed to supporting these videos, and it's because of you that we get as much content as we do, right? In the old days when I would do these videos, I would only give you a half-an-hour video, but many of you are committed to the idea of trying to double the amount of content that I bring to you each week by taking those 30-minute videos and turning them into hour-long presentations. So if you want that to continue moving forward, get in the habit, just like these friendly folks, of supporting these presentations for David and I there on Twitter. And thank you to those of you who are committed to doing that. All right, let's talk about the factor selector now. Didn't really have much to discuss with this particular tool this week because we didn't really see much in the way of any movement. You do see that in the 3-4 position, we did have a switcheroo from value being number 4 last week to 3 this week, and dividend yield being number 3 last week down to number 4 this week. And that could have been as a result of what I had mentioned on Tuesday with you. Remember, that was the day when the whole market was down pretty badly, except for energy and financials. Well, if you break down the value ETFs, you will find that energy and financials are amongst the biggest components of that particular factor. So I think that's kind of part of the story as far as why they got the leg up last week. But otherwise, not a lot of change. Quality stayed number one. Remember, that's where you're going to find a lot of the tech stocks. Momentum stayed number two. At this moment, you're probably going to find a lot of energy stocks as part of the momentum category. Down at the bottom side, you saw that low size continue to struggle. So that one I'm going to be very curious about because, again, last couple of, the last 3 days, 2 of those 3 days, the low size area did pretty well. Now, yesterday it did poorly, so you're giving some of that back. But, there's been at least an effort made in the Russell 2000 lately, if we want to use that as a broad-based proxy for the low size category. So, it's possible we can get up and off the mat, especially if the financials continue to perform. Remember, that's the category that really affects the low size area. Low volatility is dominated by more of your utilities and REITs and staples and things like that. So if there's continued interest rate sensitivity, then low volatility could underperform, and low size could be given a window to start bouncing back higher again. So we'll keep our eye on that possibility. Right now, it's just not in the cards. And again, the only change we had was in positions 3 and 4. All right, let's go ahead and get back on over here to the Paper Money platform and do some 12 grid analysis. And so we'll get started here with chart 5A. And wow, this is interesting too. And it must not be a coincidence of what I had mentioned before about how rare it was for the S&P 500 to have 4 different postures in 4 different days. It's something that, might happen once a year type of rarity there. Well, this is also extremely rare. What we are witnessing right here in front of us, which is all of these charts have a bullish posture right now. That is almost unheard of. The reason it's almost unheard of is because many of these charts are designed to do the exact opposite of one another. For instance, most of you know that when the dollar is strong, typically commodities are weak. Also, you know that when interest rates are strong, bonds are weak. Well, right now, things are positioned in such a way where there's something to like for everyone, apparently, which is extremely bizarre. I don't remember the last time it happened. I'm sure it probably has, but whether it happened on a Tuesday or a Thursday when I was doing the video is a better question, right? So anyway, I will just let you know that this is not normal, and it's probably been at least a year since the last time I saw it when I was doing this video with you. So let's go through it, see what we can learn. Starting in the lower left-hand corner, the US dollar catches my eye, not because it's strong. Remember, it's been strong. That's a continued story here. It was up another 0.62% today. That thing just will not quit. But what catches my eye today is not just the fact that we're at new multi-month highs, but we have one of those little red dots appearing above today's candle. Now, before we get too concerned about that, let's remind ourselves that we also had a red dot back here, which remember is an overbought cluster signal, and it didn't amount to anything. There wasn't any sort of pullback after that. So there's not a guarantee that it happens. It's just the way that I kind of think about overbought cluster signals is that there is more fertile ground for a short-term pullback when they exist. It's not a guarantee. It's just that the conditions are a little bit more ripe for that possibility. A good example of when it works out the way that you might expect is over here on oil. Notice that you got this red dot showing up above oil on August 9th, and for the next couple of weeks you went straight down, right? But you didn't break trend, and that's the other thing that I try to remind you guys of regularly. When we have those clusters showing up, what I expect is a short-term reversion in the opposite direction, but it doesn't mean that it's a permanent break of that trend. It just means it's a little bit of a give back because things got a little bit too directional. So we'll see if that impacts the dollar or not, but this thing has been a runaway freight train to the upside. So, at this point, it's hard to say that it's about ready to give a bunch of that back, but at least we have some technical evidence that suggests that the conditions are there. Whether the market wants to take that opportunity or not remains to be seen. We did close near the high of the day on the dollar. Of course, we remain above that rising moving average. Despite the dollar being strong today, take a look at commodities. Both gold and oil closed higher today on a day when the dollar was up. And you'll notice that gold was not up a tremendous amount. It was only up 0.05%. Nonetheless, it was enough to change the posture to this weekly bullish posture. It must be very, very close. In fact, let's right-click on the chart and maximize the sell. And you can kind of see why that's the case. It's a little bit of a, it's not very emphatic. Let's put it that way. Yes, the green line is slightly higher today than it was yesterday, but if you were to look at this like you're probably looking at it on this video and just eyeballing it, you would say that that green line is flat. Technically, it's up a little bit because that's the way that the color scheme works back there. It's going to look at it with a fine-tooth comb and actually go out several decimal points if it needs to. But to our naked eye, it does look like it was basically flat here today. So let's not make too much out of that other than the extreme rare situation where all 12 of these charts are all bullish on the same day. But gold could easily go back to a bearish posture as soon as tomorrow. If there's any sort of selling whatsoever, gold is likely to have a pink background tomorrow. So we'll see. But right now, like I mentioned here earlier, remember we do have a trade on GLD going right now, and it was the Iron Condor. Our upside is good to go. It's our downside where there's a little bit more risk, and we need it to stay above 175 tomorrow. I think we're going to be good to go there. It would be quite a dramatic day if gold were to fall, in this case GLD, $2 per share in one single day. So I think we're going to be good, but just in case something haywire goes tomorrow, just be aware that you may need to babysit that position. But for my part, I'm fully expecting not to do anything with that trade and just let that thing expire worthless and collect my 100% max gain on that trade over the weekend. In terms of oil, remember, oil's been trading a lot differently than gold. It's been marching to its own drum, so to speak. And today, it just keeps going. Up another 1.8% today, multi-month highs there. This thing is just cooking to the upside. That's really helping support a lot of those oil companies as well. So, of course, we remain with a strongly bullish posture, and of course, we remain above that rising moving average. Despite the dollar rising today, you'll notice foreign securities were also up. So that's kind of what David was tweeting about earlier today when he said it was like George's opposite day. For those of you that are fans of Seinfeld like David and I are, you'll get that reference. For those of you that are a little bit younger, perhaps Seinfeld is a little bit before your day. But some of you that were, aficionados of network comedies back in the 80s and 90s will get that reference. And it was a little bit of a weird day, the day where stuff that happened was not what you would have expected ahead of time. Today was a day when the foreign stock markets beat the U.S. stock market. Remember, that is not normally the case when the dollar is strong, especially when it's really strong. And today was actually an above average strong day for the dollar. That did not stop the foreign developed stocks from going up 1.3%, beating the S&P 500, and the emerging markets were up 0.67%. Now, they did not, so it was a little bit of a split difference there, but still impressive that, Europe, Japan, Australia outperformed the U.S. on a day when the dollar was so strong. Both of them, by the way, you can see are back to the weekly bullish postures here at the moment. The EEM is just hanging out just barely below the falling moving average. At one point during the day, it attempted to get above there, but it couldn't close above there. EFA, on the other hand, is easily above there. So that's a good sign, right? We did see that the sell-off that both of those charts experienced in the last week did not breach the prior low that was set here on the 18th of August there on EFA, and also, and actually it was both these charts, the low was on the 18th of August. The way this was trading last week, it looked like it was gunning for those lows. That's not what you want to see if you want to be bullish in those areas, right? Because then you can confirm with your own eyes that the downtrend is still in place with lower highs and lower lows. But the fact that we stopped short here on the 7th from going below those lows gives us a little bit of hope. Now, the story might not be fully written yet. This could be just, act 2 of the play or what have you. But right now it's looking a little more promising, right? We're back above that moving average on EFA. So, hey, let's let's get some momentum going there as we head into the fall. So we'll see if that happens, but right now be aware that we did have that 30-day moving average color change on EFA from red to yellow, and that's the first time since going back here about a month ago, actually just over a month ago was the last time we had a yellow moving average on EFA. In other words, on a day when price was not below a falling moving average. And if we get an update tomorrow, EEM will likely join EFA in that pursuit, and their moving average will likely change to yellow tomorrow if we get an update. Of course, I don't know that, but if we do, then expect that moving average color to change. You'll notice that preferred stocks also were able to get up and over that moving average, so some strength there. And again, remember that more times than not, when the yield goes up, you will find weakness in preferred stocks because they act more like bonds than actual stocks, right? You have more of your fixed income stream that's associated with preferred stocks. So today was a day where preferred stocks went up despite rising rates. In terms of bonds, and by the way, the 10-year Treasury yield remains with a strongly bullish posture above that rising moving average. We do not have a break-in trend yet, and it closed today at about 4.28%. So still well above 4% yields on the 10-year. When yields are up, more times than not, bond prices are down. And in our three bond categories here, that was mostly true, but not entirely. Right? We see that TLT, which is the one that's most closely aligned as the opposite of TNX, was indeed down, and that's what you should expect. What was weird about it, again, is similar to the conversation with gold, that despite going down like we would have expected, the posture did not change. It stayed weakly bullish, which is a little bit strange. It's not looking particularly healthy. It's great that we've got the green background color, but I think we'd feel a little bit better if TLT were sitting above the moving average. Right now, it's still kind of giving you the impression that it doesn't really have the juice to get it going. In fact, it's kind of giving you the impression like it wants to roll over here again. So we'll see. Foreign bonds and high yield bonds, oddly enough, closed higher today, right? Despite rising rates, foreign bonds were up and junk bonds were up. And so you can see what that means for the charts. Both of them are back above their moving averages now. In the case of foreign bonds, we're above a falling 30-day moving average. In the case of junk bonds, we're above a rising 30-day moving average. Remember, sometimes you get a little bit more correlation with high-yield bonds when oil prices are doing well. So that's why you're seeing that high-yield bonds are a leader in this market from a bond perspective right now, or at least part of the reason behind that. So you have a strongly bullish posture on high-yield bonds combined with a green 30-day moving average with price above that rising moving average. So of the three bond categories, it appears that junk bonds are the strongest. Remember, that's a good sign for risk appetite as well. Kind of playing into what I had mentioned before about the ARM IPO. That's a good sign of risk appetite that that IPO, which was a big one, was absorbed easily by the market. And in fact, they couldn't get enough of it. In fact, as I look on my other monitor right now, ARM is actually up even more after hours. So just to show you what that looks like here, ARM closed today at 63. Again, it opened and it was launched for secondary trading at 56.10. It closed the day at 63.59. And if that wasn't enough, look at where it's trading after hours right now. The last trade was at 67.40. And actually just take to 67.50 and 67.60. It's moving quickly while we're talking here. You can see that 130 million shares were traded. So right now it's actually $4 per share higher than where it closed. So it looks like people aren't satisfied with their fill in the normal trading. They're continuing to push this in the after hours session, right? That's another way you can judge risk appetite. Is there enough money slashing around to absorb these IPOs? Because it's kind of like creating new supply out of thin air, right? You have demand of money, and if you have a fixed supply of stock, you're going to see that the price is going to be pushed around by how much desire the buyers have versus the sellers. Well, when you throw IPOs out there, you're basically putting brand new supply into the market of shares of stock, And that money, if it's going to buy that shares of stock, got to come from somewhere. And sometimes it gets sold out of other stocks. Well, this could be a case today where the stock market did quite well, ARM did quite well, and maybe some of the money came from CDs or treasuries or some of these other areas. And that's generally speaking a positive sign for risk appetite. You'll also see that another way to judge risk appetite is through the speculative cryptocurrency area, and Bitcoin also had a very good day. It's up 3 days in a row. It's still well off of its highs here a few weeks ago, but it's giving you the impression that it's trying to get up and off of that 26,000 area. Remember, we talked about that on Tuesday, talking about some of these oversold cluster signals and how it was just kind of stuck right there on that horizontal line, and it just refused to go lower. It tried to on this day, but it closed back up in that support range area. Well, the last 3 days after that crazy day has only emboldened the bulls even further there. And that's another sign of risk appetite being somewhat healthy at this exact moment when cryptocurrencies like Bitcoin are making moves higher. So we're at 26,600 here on Bitcoin, and it has a weekly bullish posture. Still below the falling 30-day moving average, however. All right, let's now take a look here at our sectors. This will be chart 5C for those of you following along at home. And here we still have a couple of pink charts. Remember, on this second set of 12 grids, it's not nearly as rare to have a clean sweep as that first set. But today is an oddball example of where a few strange occurrences were taking place. In this particular set of 12 grids here, where we're looking at the market cap weighted sectors, notice that industrials and staples remain with those bearish postures. With staples, that's not entirely surprising. That's been more of the same old for 2023. With industrials, it is a little bit more of an interesting case, because industrials had been one of our leaders of this market for much of this year, but more recently they've kind of started to give back some, and part of that might be what's going on with some of those transportation stocks. Another stock we talked about a lot in my question and answer session today was UPS, and some of the union concessions and some of the wages that the UPS drivers are making, and we had a fun conversation about that. But UPS is a good example there within the industrials of a transportation stock that just cannot get going here at the moment, and I'm sure that's part of what's pressuring the industrials here as well. So the industrials were up nicely today, as were the staples, but both of them did not go up enough to change the posture. They're still with those bearish postures. Both of them, by the way, still below their falling 30-day moving averages as well. Joining them there with that red moving average is healthcare. So notice that healthcare has a weekly bullish posture according to the market forecast. So you've got that light green background color, but the color of the moving average itself remains red because price is still below the falling moving average. However, of those three charts that have the red moving average at the moment, healthcare is the one that is the most likely to resolve that issue the soonest, right? Because it's the closest to the moving average. In fact, it touched it earlier today. It just couldn't close above it. So, we'll see if maybe some of those, CRISPR stocks that I had mentioned a couple of days ago, whether we're talking like speculative biotech stuff or whether we're talking about kind of old school pharma companies, right? Your Eli Lillys of the world have been amongst the strongest stocks out there. Of course, United Healthcare is trying to catch a bounce here more recently as well. That would help, as that's one of the bigger market caps out there. So we'll see if there's enough oomph out of that area, but the potential's there. So we'll keep our eye on it. In terms of all the other charts, you look at the moving averages and they're either yellow or green. Importantly, the S&P 500 went back to green today, and communications joined it in that pursuit today. So both of those are fresh with price above rising moving averages. Others have been there for a while, like energy remains our stalwart, right? You probably don't need me to tell you that, but just to confirm, energy hit yet another multi-month high here today in a price perspective, and it's the only one of these charts that really has kept its uptrend the entirety of this 3-month move that we've seen. Others have kind of gone back and forth as far as whether they can have the strength or not. Technology is back above the moving average, but it's still not enough to pull the moving average up with it. It's probably going to require Apple and Microsoft and Nvidia to kind of get their act together if that's going to be in the cards. Communications is likely a story of what I had mentioned on the heat map discussion, where Alphabet hit a new 52-week high today. Meta was the strongest of the Magnificent Seven. Remember, both of those companies are communication stocks, and then you also had a little bit of an assist there from Disney today in that regard as well. So that was a really nice showing out of the communications area, especially from a market cap weighted perspective, where those three companies are going to have a little bit of extra say in how things shake out. So communications were up 1.39% here today, and it looks like the only sectors that did better than that were the real estate and utilities interest rate sensitive sectors down below. Utilities were up 1.46%. Real estate was up 1.82%. Again, strange because interest rates were up today. Usually that does not happen. Maybe that's one of those poker tells, right? For those of you that like that movie Rounders, when he's sitting there with the Russian at the poker table and the Russian breaks open his Oreo cookie type of a scene, right? It's very dramatic, but when you're a poker player, not that I'm one at all, I don't know what I'm doing at the poker table personally, but those of you that do, you look at your opponents and try to find what the poker tell is, right? To see if you can try to interpret what they might be holding in their hand. Well, sometimes you find that in the stock market as well. When you have oddball days like this, maybe this is the market tipping its hand that despite interest rates being up today, some of these areas within the market don't think that can last. Notice that utilities have actually been roaring quietly for a week at this point, right? They had all these oversold cluster signals, and now all of a sudden we've got 1, 2, 3, 4, 5, 6, 7 days in a row, trading days in a row to the upside for utilities, and now we're well above the moving average. I'll tell you, it doesn't really feel that way to me. Maybe I'm in the wrong utilities, or maybe I just haven't been paying as much attention. But utilities have been getting drilled so hard this year that they've got a lot more work to do than just 7 days. But hey, it's a start. We'll take what we can get in that regard. All right, let's go ahead and have our discussion now about our trade application example. And by the way, in case I didn't mention it before, none of these sectors were down today. Okay, so a great day across the board. The quietest sector was healthcare. It was up, but it was only up 0.32%. But let's turn our attention to the conversation of discretionary stocks and retailers in particular. Notice that discretionary is one of our charts that we have a green moving average where price is above the rising moving average. And we also have a green background color telling us that this is a strongly bullish intermediate posture according to the market forecast. And for those of you that have heard me analyze XLY in the past, you'll know that there are 3 stocks that really control the fortunes of XLY. And those 3 stocks are Tesla, Amazon, and Home Depot. So that's a great segue because Home Depot is our trade idea of the day. So let's go ahead and pull up the chart here. Ticker symbol, of course, is HD. And you can see that today was a pretty strong day for Home Depot. It was up 1.15%, so it did outperform the market. And after the last 3 days where it looked like it was kind of rolling over underneath the falling moving average, notice that today was a strong enough day where you didn't even have that yellow transition on the moving average. You went from red to green today. So that shows you the power behind today's move. It was a pretty substantial one for this particular company. You can see that that move was enough to actually change the posture from bearish to bullish when we're using this swing trading chart where we emphasize the near-term blue line, right? Yesterday it was in the low reversal zone. Today's push higher out of price was able to drag that blue line higher. If that wasn't enough, notice it did the same thing for the green line. While this is going to be more of a consistent with a swing trade because it's going to be an options trade that's going to expire in 36 days, for those of you that are trend traders, you might like what you see here as well because today's move was enough to pull the green line, the intermediate line, higher as well. That's at 38 and rising. So it's just barely, you can kind of see that that green line back behind the scenes there was going lower, going lower, going lower, going lower, and then boom, here over the last day, you had enough push in price to drag that green line up in addition to the blue line. So, you probably have multiple types of traders that are willing to support this here. And despite how Home Depot kind of feels like it's gone nowhere for the last month and a half, that's maybe a disappointment to those that want to be bullish on it. On the flip side, it hasn't broken down either, right? There are a lot of charts out there that are breaking down, right? One of our bearish trades that we have right now that I can recall, since I was just looking at this earlier in the day, was Advanced Micro Devices, right? We have a bear call spread on AMD right now. It was down today. It was actually down 1%. So one of the rare stocks that was not only down, but down a decent amount. So we're happy about that because we did a bear call credit spread on AMD here a little while back. Today, we're going to do the opposite on Home Depot. This is what is known as a bull put spread. It's a selling spread, meaning that you're receiving credit up front, but the concept is kind of the same. It's just that you want the stock to go up or sideways rather than down or sideways with the one like I showed you with AMD. Now you can see I do have a black line drawn on the chart here. And what that represents is where our break even is on this trade. So I did the October contracts, sold the 325, bought the 320, and I think we sold it for $1.21. So we did collect our 30% return on risk like we traditionally shoot for. And so our break even on that trade is 323.79. And so what we want out of this trade is for it to stay above that black line for the next 36 days. Now remember, if it goes below it somewhere along the way and then pops back above it, in the middle of October, that's good enough for our purposes as well. But I do want to point out that this is not very much in the way of wiggle room, and that is explained because volatility is very low right now, right? If you're looking at VIX to kind of judge what's happening with volatility, it's fallen off the map right now. The VIX is back to 12. I mean, I don't know if a lot of people are aware of that. It kind of feels like we've had more volatility since the beginning of August, but that's not what the VIX is telling you. The VIX is telling you this is the least amount of volatility we've had in 3 months, right? You do have an oversold cluster on the VIX, so who knows if we get a little bit of a reversion to the mean on that. But the point is, that's the reason why this looks like a fairly tight trade here compared to what I normally show you guys. So some of you might not exactly like that, and I can't blame you. It's not that I like it either. It's just that I've got to put up with it. If I wanted the 30% return on risk, then I'm going to have a fairly tight window there of being right to being wrong. So this one, certainly far from being a layup, but if it can continue to maintain strength above that rising moving average, we're going to be in good shape. If the whole market rolls over between now and the middle of October, then this is one that's likely going to end up in the loss column for us. So we'll see how it shakes up. But if you think Home Depot is either going to go up or at least sideways, then maybe this is a trade that you can accomplish on your own. On the other hand, if you're just nervous about the market's prospects here in the short term because it's the seasonally weak time of the year or whatever your reason may be, then this one's probably not going to be the one that's your first choice. Don't blame me, blame the VIX. And of course, you have an opportunity to do other types of trades if you wanted to there as well. I had actually looked at going out to November, where our break even would be quite a bit lower. The problem is we'd have to hold through an earnings announcement if we did that. So I kind of chose the lesser of the two evils in this case, but it may very well come back to bite me. We shall see. But that's the trade idea for the day. A little bit of a pop higher there in Home Depot, as discretionary is one of the leading areas of the market here today. So I thought I would show you what a bull put spread would look like on that particular one. Okay, that's what I had for you here today. I hope you guys have a great weekend. Enjoy the Jets and Vikings here tonight, and of course a whole slate of games on Sunday. I'm a little nervous for my Rams because the 49ers usually hand it to them nearly every single regular season game. So if the Rams can somehow manage to win that game, then I'll know that there is something to the team this year. But I'm going to try to keep my expectations low so I'm not too disappointed by the outcome. Whoever your team is, I hope you enjoy your weekend. Remember, David should be back with you tomorrow. I'll be back in action with our premium members for top-down trend trading and options for long-term investors on Monday. And then I'll see all of you in the free YouTube video here Tuesday afternoon. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.